Welcome to Markets Now. I'm Michelle Roth, along with Tomm Pfitzenmaier with Summit Commodity Brokerage. Seeing some mixed trade this morning. You've got higher prices except for cattle and wheat. And Tom, let's talk about the grains. It was a tough down week last week. Corn and soybeans are trying to recover here this morning. Is that technical because we're oversold, or are we trying to put a little weather premium?
I think it's both. I mean, obviously we're oversold technically, for sure. We found good support, I think, right around $5 or maybe a little under. And then all of a sudden you've got a forecast that's calling for maybe not super hot, but warm with not a lot of precipitation over the next couple of weeks. And that's kind of a formula for maybe a little short covering and a little potential for some strength here. So, we need to consolidate and kind of work our way out of that oversold condition anyway, which was bound to happen. And this may be the start of it, or it looks like the start of it.
At least we have $5 support on the December corn.
Right. Yeah, that was important. I think. What the upside is, I don't know whether it's 5 1/4, 5.18, somewhere up in that range, and then we'll have to see how much go this has got in it. I'm assuming the crop progress this afternoon is going to show that most of the planting is wrapped up, and the majority of the corn belt emergence should be quite good. So that part of it's, I don't see that it being anything but a little bit negative. But I guess in another week or two we'll start to get a crop condition rating, and that'll be really the next one that's really has the potential to be impactful.
But really, this market struggle trying to digest or work in some of these bigger projections from the WASDE report, right?
Yeah, that was sort of the killer here for the last week or so, is as the markets tried to absorb those big numbers or the potential for big numbers, and kind of figure out if they wanted to agree with that 181.5 billion bushel per acre yield. I mean, up to this point, things look quite good, and that certainly seems possible. But we all know July and August and September weather is way more important than what happens the last week of May.
Yeah. Soybeans also getting a little help from some soybean meal sales of the Philippines this morning.
Yeah, soybean meal. I mean, soybean meal is benefiting from the problems they've had in Argentina. They've imported some Brazilian beans and are able to crush those, but they're just not selling soybean meal like they have been or traditionally do. And the U.S. Manufacturer processors have benefited from that. Now, I don't know that meal's got a ton of upside potential, but again, it could have a nice correction rally, just like the beans and the corn probably are going to have. So I don't think this is necessarily a time to be wildly bearish the meal market, but again, probably upside somewhat limited too.
Right. You mentioned the recovery rally with corn. How much rebound do you think we could see in beans?
Oh, I mean, it's not that uncommon to see a 50-cent recovery rally in soybeans. So I guess I think that's certainly a good possibility, particularly in the old crop, since that situation's fairly tight. Basis levels are strong. Farmers selling's pretty light. So I think you could see that come along pretty well. Now, new crop I think is going to struggle. I mean, obviously you're going to have a little correction rally, and that's not a big surprise. But going much beyond that, you're going to have to see some sustained dry weather, I think, before that's going to go very far at least on that new crop contract.
And what about the wheat? We've had a big correction from the highs. We keep going down and consolidating here. And has that been a demand concern, or has that been the fact that they've gotten some rains in some of these HRW areas, or the fact that we're importing wheat from Europe now?
Yeah, that wheat one is a tough one. I mean, all you read about are all the crop production problems we've got, and yet we just cannot seem to get anything going in that market. Now, this morning, we're not even doing anything. You got corn and beans up pretty sharply, and still wheat can't go anywhere. So that really is a market that's it looks like it's going to continue to struggle here.
Yeah. So talk about the talks as well, and what these mean for agriculture, because we kind of continue to see money flow as an impact of this market as well.
Oh, I think it could have an effect on the dollar. Certainly, whether the dollar goes up or down has a big impact on our products. I think, generally speaking, the stock market's telling me that they think it's going to get the situation is going to get resolved between the president and the House, and I think that's what everybody's assuming. If it doesn't, it probably will. The disagreement's probably only going to go beyond the deadline by a week or two. So I don't really see it having a big impact on commodities, or at least the commodities that we trade, except for maybe the potential impact on the dollar. And again, the dollar has had a nice little rally here, but I don't see it moving all that much either on these debt concerns.
Cattle market is consolidating. We had a nice update last week. Cash trade was steady to a little bit better, but you had an atypical BSE case, and we also a cattle on feed report that came in fairly neutral. So is that what we're treating or what?
Yeah, well, you had an expectation that it was going to be a slightly friendly cattle on feed report. So when it was neutral, that's maybe a little bit bearish. Otherwise, beef demand's held up quite well. The economy's really been supportive. The numbers were down again last week. Weights were down again last week. All that's supportive. So if we can continue to sell the beef domestically, we're probably going to be all right. I mean, you can have corrections. Any good market always does, and I think you could see June cattle pull back $2 or $3 here, consolidate, see if demand continues to hold up, and then if the numbers continue to be lower, we're probably going to be quite well supported here.
And feeders have been we scored new contract on Friday, but now with corn moving higher, how much farther do you think we can even push the feeder market?
Well, if grains continue higher, and this isn't just a one-day blip here, but if actually move up a little bit, I think you're going to start to. It's almost the opposite of the grain markets. Feeders got overbought, needed to consolidate. If you do have the grain markets pop up a little bit, that's going to give them an excuse to pull back a little bit. So I think you could have some kind of correction in the feeder market that's kind of been set up to have one. So I don't see that going too far as long as the fat market holds up. But I think you probably will have some degree of correction.
Right. Hog market, we're trying to recover there, or we're trying to bounce, and we've narrowed the distance between the futures and the index. And so can the cash market kind of push this thing along?
That's an interesting market because pork exports have been really, really good. Pork in the store is pretty cheap. So at some point, I think you're going to start to see at least a little bit of domestic demand shifting away from beef into pork, just because it's a good value. If the economy softens a little bit, that's even going to become more important. So, numbers haven't been overwhelmingly huge. So I guess I think the cash market's going to firm up. It's going to put a good floor under the futures market. And you could see a nice rally. I think December's got the potential to move its way back up to $80. If it did, I would certainly use that as an opportunity to get some products sold.
Gotcha. Yeah, we're well overdue for a rally in the market for sure. All right, thanks so much for joining us. Pfitzenmaier with Summit Commodity Brokerage, and that is Market Now.